Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode features a different topic and a guest who shares their experience and knowledge with us. Tune in and learn something new with BankTalk podcast.
Hi, and welcome to BankTalk. I'm Rich Carty, your host today, sales executive with Remedy Consulting. Today, we'll be talking about central bank digital currency, CBDCs. I think it will be a good intro, if not a refresher for some on the topic, and we'll take a look at what's going on that side. So, let's dive in. Hi, welcome back to BankTalk. Thanks for joining us today. We're lucky enough to have Lynn Marlar with us, the U.S. Head of Partnerships and Memberships for Financial Services with GBBC. Lynn, thanks for joining us.
Thank you so much. I really appreciate being here. Maybe I should tell you a little bit about myself and the organization that I work for. My name is Lynn Marlar. I really wear two hats. One is as the global head of partnerships and memberships for an organization called Global Blockchain Business Council. That is the largest blockchain, crypto, digital asset association in the globe. We have over 500 institutions that are members, 301 ambassadors around the globe, and we're in 117 jurisdictions. We do three things. One is education from soup to nuts. Partnerships, we partner with any name you've heard, whether it's a financial institution like JP Morgan, whether it's an airline like Delta, we're working with the United Nations on food safety as well. We also do a lot of what we call standards mapping, which may not be the right term, but essentially it's how do we in the institutional marketplace for these new digital assets, how do we create standards? I come from the banking industry. We had standards like SWIFT, if you want to move money around the world, or we had standards that you had to, if you wanted to sell a stock, you wanted to integrate with someone like a DTCC or NSCC or whoever in the industry, you would have to have a standard format to be machine readable and to be understood by the computers, right? We don't necessarily have that sort of integration. I think what GBBC really tries to do is we look at it from a lens of, when the internet got started, we might be able to talk to each other if we were in an intranet, meaning a silo company. If you and I work for the same company, we could share emails. If you worked outside that company, we couldn't. We're almost in the same space. So if you're at a JP Morgan, they have a full stack of products and services in the digital asset space. You go outside that, it's a lot more challenging, right? So we're trying to create that interoperability that creates a whole new ecosystem. So that's hat number one, is head of partnerships to GBBC. Hat number two is something I started with co-founder of a company called Tab Group, which is a media distribution company, I guess is the best way to describe it. And he approached me to do some work around women in digital assets. And so we do about 2 or 3 large events a year, New York, London. We have a London event in November, and then a small curate event in Singapore with one of our largest sponsors. We also do smaller curate events like symposiums where companies hire us and say, come on in, I want to get introduced to Remedy Consulting or FIS or Bank of New York Mellon or whoever. Can you bring them in? And we want to talk to them about the services that we're offering in this space, so everybody gets more knowledgeable. Tab Group, who is my partner, CEO, has a newsletter they publish 5 days a week, which has equities, fixed income, digital assets, and then they host a variety of white papers. So if you wrote a white paper, they actually are always looking for content and they publish. So you get 55,000 eyeballs on the newsletter, as well as on any white paper. So for me, it's been a great distribution channel to get access to people that maybe wouldn't know about women in digital assets. So I wear two hats. Both are what I call sort of fractional jobs. And my background is I spent over 30 years in traditional finance. Came up as a commercial lender, ended up my career for the last 15 years at BNY Mellon as a group head for what they call non-bank financials, with his asset managers, hedge funds, private equity, money service, money transmitter businesses. And that's really dealing with all the asset management space, all the way down to working capital, right? So talking about post-trade settlement, security settlement, the whole ball of wax. So that's how I come to this space.
No rest for the weary. It sounds a lot more like there's more than two hats going on over there. Well, I guess with GBBC, do you guys work solely with FIs, or is it outside of FIs as well?
We work with every single industry sector you can imagine. I would say financial services is one of the first movers in this digital asset blockchain ecosystem. However, we're working with airlines, we're working with companies that are in the supply chain space, because similar problem, right? Whether it's trade finance or buying price, think about an airline, right? Delta Airlines, UPS, FedEx, we're working with them. They need to get from an airplane tire, which I'm sure has an exorbitant cost to it, to food safety. So you go on a plane and you get sick, and everybody on the plane gets sick. We got to find out where that food came from, right? So it's really having that provenance of that, whatever it is, food or tire. Every single industry is kind of looking at this from a supply chain and also from an asset class. If we look at tokenization being, people call it real world assets, well, any asset. So, that could be my identity. Right. So I worked on a project for the state of Rhode Island to develop a RFI for a digital identity for the people who live in Rhode Island. And that was going to cover your license, your registration of cars, and your voting. Now, think about that. So you go into a polling place. No longer do you yell out your name. You scan your phone. And it comes up, Lynn, you live in this district, you can vote today, right? You get a check mark. Lynn, I want to go register a car. No longer do I have to stand in line and say, hey, I want to register my car. I have an ID on my phone that basically says, hey, she has a residence here and can actually register her car in this state. So those are the kinds of things that states are looking at. So, this is all encompassing.
Absolutely. Well, I appreciate that. BankTalk's been looking for someone to kind of talk about, the central bank digital currencies piece. And I think I met you at one of the Banking Association events and you were speaking to it. So it just kind of seemed like a good fit. If you don't mind maybe defining for our listeners what a CBDC is, and maybe tell us, how cryptocurrencies have morphed into, this concept of within the government.
Sure. Well, I think what the name sounds like is central bank digital currency. So really what it's saying, and I think the best example we have at the moment is El Salvador. And I think it was about 2 years ago, the country of El Salvador, who was actually, their currency was the US dollar, felt that their currency was getting devalued. So they looked at how can we change the trajectory for our countrymen. And their president decided that he would exchange US dollars for Bitcoin. Now, many of those people have made a lot of money because Bitcoin was probably, I think it was 4,000, maybe it was a little bit more. I don't actually remember the dollar amount that it was. But, well, today's not the best day, but it's around 50 grand, right? Today, just not a good day. Long story short, what happened in El Salvador was you basically, if you were living there and owned, a storefront or business or whatever, and you had $1,000 US in your bank account, the government was going to give you something, say $1,000 equivalent of Bitcoin. So now you have two things. You have a US dollar in a bank, potentially, which most people didn't trust. And then you have 1,000 of this thing called Bitcoin, and you need a wallet. And so a company I'm very familiar with went into El Salvador and created the Shiva wallet, which essentially allows an individual to go to a storefront or a business and say, hey, okay, Rich, do you want the US dollar or do you want Bitcoin? And I could write you a check, a Venmo, you pay you cash, whatever. Or I could get on my phone and send you the equivalent in Bitcoin. Now, most people aren't really thrilled with the way El Salvador has, how it's evolved. But many of those people are much happier that they have it than not having it, right?
I see.
So that's probably a great example of a central bank digital currency, or at least a good example. I mean, we still have a long runway to go to see how great it is. I think the probably my opinion, these are my own opinions, the worst example is China. While they did something that I think is extremely interesting to get their economy interested in a digital yuan, which is essentially saying, hey, for dollars, instead of giving dollars, which are paper currency, I'm going to give you this digital currency. Essentially, they're the same value. What the Chinese government did was they went into an area called Shenzhen, which I've visited many times as a banker, which is the joint venture capital of the world. Think of a company, whether it's Talbot's or Reebok or Nike or whoever, they all have a business there and they're manufacturing there. They went into those storefronts or those manufacturers and said, hey, we're going to give you, Lynn, if I was an owner, we're going to give you the equivalent of a couple $1,000s worth of this thing called a digital yuan. So Rich comes in and buys a pair of sneakers. I might have a Reebok store, right? And say, hey, I don't have, either the traditional yuan paper, right? I don't have the Chinese currency paper. I have this thing called the digital yuan. I'm going to give you that for exchange. So let's say you give me $200 and the shoes are $100. I'm going to give you $100 worth of this new currency or this new thing called the digital yuan. Now you have that. You have a wallet, you have that in your wallet. You now then go to dinner and spend, $50 of that digital yuan. So what they did is they really took it from a great grassroots, bottom up and said, everybody's going to be able to experience this new currency. That's how the future is going to evolve. Now, the bad thing, I guess, in my opinion, the bad thing is that one of the, while it's great, you don't need a bank account, because if you look at in the United States, I mean, I worked for a very risk-averse bank New York Mellon. Very difficult to open a bank account. You have to have a legal address. You have to have assets. We have to be able to find you if we need to. A lot of things go into getting a bank account today. And I'm talking about traditional banking. When you look at the digital world, I don't need that. Right? This is a peer-to-peer transaction. Think of a Venmo almost, but it doesn't have to be married to a bank. So I don't need that. I find you on my, my phone, right? And then I pay you in that way. So while on one hand, it's great because it democratizes some of the financial products that people may not be able to get, it also, and this I think is the worst part for China, has created a surveillance society. So my example of if I'm in Shenzhen and you want to buy a pair of sneakers from me, all of a sudden the Chinese government knows exactly what you paid for those sneakers. They know how much digital yuan you have, and they know where you're spending it. So if you were going out and buying a piece of art that costs a lot of money, they're going to come after you and say, wait a minute, you don't have, we're surveilling you. You owe us taxes because we didn't think you made that much income. And that's just across the board. They know that, you went to a restaurant after you bought the sneakers or whatever, right? So it becomes much more of what I think there's been a very large argument amongst countries about, do we want a surveillance society? And I guess my personal opinion is that the United States is a long way off from a central bank digital currency because it strips me of some of my own rights. I still have to pay taxes, but, and many people would like to see cash go away because there's a lot of nefarious activities. I mean, drugs are usually bought with that, guns are, so it would pretty quickly identify who's selling the guns or the drugs, right? If you put it on a Bitcoin or some other type of crypto asset. So there's the sort of pluses and minuses of a central bank digital currency.
Yeah, that's interesting. I mean, thinking about that and just to kind of think back, El Salvador is doing it for one reason, and then you have China doing it for maybe other reasons. And on the grand scale of things, whether you talk population or the way things are run, it's, used in totally different ways.
Right. And I mean, one of the things that has, I think, gotten interest is, it is controlled by the central bank, like the Fed. I mean, the Fed is controlling money supply, right, to a certain extent. So it is, the central bank is standing behind that in many cases. Now, we're off the gold standard, but I think that many of the countries are looking at like, well, okay, so we're backing that up with Bitcoin or whatever that currency might be. The digital yuan might be backed up partly by gold or some other asset class, maybe US dollars even.
Well, thanks, Lynn, for that. And I guess maybe we can define a stable coin and maybe talk a little bit about the differences between that and, a CBDC as well, if you don't mind spending a minute there.
Sure. And, I think there's stable coins are, as the name suggests, right, being more stable, especially today being August 5th of 2024, when the market has gone down, I don't know, 1,000 points or whatever, and Bitcoin has gone down along with it.
Yeah.
One of the things that has been a concern is that Bitcoin and other cryptos, not just Bitcoin, are very volatile. Many companies, a lot of institutions are leery of holding them because they are so volatile, right? How do you manage that type of risk, especially look at a financial institution managing that risk? So, the first stable coin that was developed was a consortium of Circle, which has USDC, which is USDC Circle, which is the stablecoin, and Coinbase. So they got together, did a consortium, I think it was 2017, 2018, and created this thing called the stablecoin. That was really the start of stable coins. So there's two very large stable coins that are out there. I would say Tether is one and USDC is extremely large as well. It's probably the second largest. Long story short, there are four types of stable coins. The first is one-to-one backed by a fiat currency. So let me stop there and say that means if you have $1,000 in a checking account, right, or an account, it is equivalent to your Bitcoin is equivalent one-to-one. So I don't know what the conversion rate is today because I haven't really looked at it, but it's one-to-one, a dollar-to-dollar relationship. And typically, if it is fiat, it's backed, and we saw this with institutions that were holding Bitcoin or other cryptos, like Silicon Valley and Silvergate. They would back it by securities, right? Could be mostly treasuries, which is a US equivalent, and cash, right? US dollar cash. Right. So that's the first type, a one-to-one relation with the fiat. Now, that doesn't have to be US dollars. That could be in France, and that could be equivalent of the euro, right? But it's a one-to-one relationship stablecoin, probably the most prolific of the stablecoins. There's also something called a commodity stablecoin that can be backed by silver or gold. So there are some gold funds out there that have a stablecoin backed one-to-one by gold. There's also other things like real estate. So there are stable coins that are backed one-to-one by the value of a real estate. So if I have $1 million worth of real estate property, I can convert that to $1 million worth of a stable coin, right? That's a one-to-one equivalent. The last one is something called an algorithmic stable coin, really computer-based, in the way that the best explanation I have of it uses computer modeling to basically try to keep a stable number, all right, with a bunch of assets over here. So you could have, funds, you could have other cryptos, et cetera, in a pool that tries to create a one-to-one relationship. Not easy to do. And we've seen some algorithmic funds like Luna and others just totally crash, right? And so I think that's the one that is most risky, and most people are not doing algorithmic stablecoins. So that's really the four different types. So they could be fiat, they could be commodity, they could be backed by other cryptos, which is, if you want to call it a commodity security, we still don't have a good answer, real estate, and then the algorithmic. So there's four types.
Yeah, it's interesting. I was going to ask you which the most risky was, but obviously you answered that right off the get-go.
Yeah.
Well, let's talk a little bit more maybe on the U.S. side of the house. We talked about the other countries maybe using that. Yep. In your mind, or what are you hearing in terms of maybe a timeline for the U.S., putting into place something on the CBDC side? Is it short term, long term? What do you think?
I'm not optimistic for a CBDC for the United States. I think not only do I think it's a long-term decision, but I really don't see how that would pass. And the only way that that might pass, and there was a fantastic paper written by the Federal Reserve of Boston with MIT called the Hamilton Project. And Hamilton Project really setting the stage for a type, kind of watered down version of a central bank digital currency. When I say watered down, I mean not the surveillance type of China, but the facts are this. Money is dirty, as we found out during COVID. Money is expensive. You have a retail store like a CVS or Marshall's or Macy's, right? You go in and pay cash, checks, and credit cards. That cash is sitting in a cash register. I got to get that to a bank. I need someone to pick that up. They've got to have security. They've got to watch that till it gets to the bank. I've got to make sure that I reconcile to that. I mean, the amount of work that goes into moving cash around to get it where it needs to go is expensive. The security behind that, you look at a store like, say, TJX companies, and the amount of money they spend on what they call vault services, to have a truck with guns and, all sorts of whatever it needs to get that cash, put it in that truck and bring it to a bank. Right. So, the article, the white paper, which was written by MIT and the Federal Reserve Bank of Boston, was just about, hey, we need something. This is not the best option, this paper stuff. And it's dirty. So they have washing stuff at the Federal Reserve in Boston where they wash the cash. All of those things combined, we need to find some type of a central bank digital currency that allows me to, like, I think of Venmo. It allows me to send you money without writing you a check, without giving you cash, whatever, right? Yep. So I think there's a lot of benefits to it, but I think the scary part for many people is this surveillance idea that now everything's on a record and it can't be changed. I can't say, that right. You bought my car for $500 when you paid $5,000, right? I mean, I think that's going to take a long time. On the other hand, I think stable coins, I think we're going to see regulation fairly quickly in the US. So we're seeing stable coins and deposit tokens. And deposit tokens, I like to think of a little bit like a stable coin in that your bank, again, here we go, as opposed to a central bank currency, your bank, I'm just going to say Bank of America because easy, but let's say your bank account is at Bank of America. They say, hey, you have $1,000 in your checking account. I can give you a deposit token. Again, looks more like maybe a Venmo, right? A deposit token on your phone says you have $1,000. You come into my store in the United States, want to buy a pair of sneakers. I say it's $100, like a Venmo almost. This deposit token says, hey, Rich is good for the money. He's got $1,000 in his bank account on a token at his bank. All you got to do is click, cha-ching, and it's gone. Kind of feels like a credit card, but it's really a token. It's really like a debit card, right? It's taking the money out of your account, but it's a token. And it verifies, hey, I don't have to, trust you. It's not a credit card. It's immediate. And there's no, I've got this 4 to 5% fee that I'm paying for use of a credit card, right? That I lose out. So that doesn't happen. Much cheaper and much more efficient for the banks, really, and everybody. I think we'll see stablecoin legislation come fairly soon, obviously after the election, but I think 2025, 2026, pretty soon. And then deposit tokens are starting to really heat up. I just read an article about another one today. So,
okay. I guess speaking, obviously it is an election year with some, with the presidential race. Any recent comments you've heard from either candidate, that you think maybe sways any of that?
Well, the only thing I will say is there's two women who've been very vocal. I mean, there are others, believe me, but I've watched Senator Lummis out of Wyoming. Wyoming has moved very rapidly in adopting blockchain technology as a state. And remember, some states are much more favorable. It looks like money transmitter, money service businesses. Some states are very favorable. You can hold crypto in my state. As state says, absolutely not. Wyoming has been very open to a lot of the technology and different types of digital currency. Long story short, Senator Lummis in 2020, I think it was, well, at least 2021, wrote something called the Responsible Financial Innovation Act, which was, hey, we need digital assets for some of the reasons I've just explained, right? Digital identity, maybe Web3. I could take advantage of my DNA and earn money from that for a study or whatever. But one of the things I think we're seeing is Senator Lummis talked at the Bitcoin conference just a week or so ago about a new paper. And frankly, it's so long, I can't even remember the name. But the idea is that if we went out and bought Bitcoin under the assumption that that asset class is going to be like property, we all hope we buy a home and it raises in value, or a stock increases in value, right?
Yep.
But with the idea that over time that Bitcoin is going to be worth more and more. If the US government went in and bought, she had a formula of buying so much every year that we would be able to pay off our debt. Now, to me, that sounds super interesting. I have not read the full article, so I can't really say much more, but that's a very intriguing idea if we believe that Bitcoin is everything that it promises to be. So I think that's super interesting because it looks at, this next generation, what is going to happen? I mean, we've got a lot of, we've got a debt crisis that has to be resolved at some point. And so how do we do that? This may solve some of those issues, hopefully. So I think that's, she's got a very interesting paper on that. So
awesome. Well, that's really helpful insight, obviously, and seems to be like the landscape's changing. We're probably looking at other countries to see what happens over, the next few years, and who knows what happens down the road.
Yeah, I will say on that note that we are behind. The US is behind. The UK has already set new standards in crypto regulation. They implemented something called MiCA, the Markets in Crypto Assets Regulation, and they have some very significant industry guidelines for the industry. It's a very comprehensive regulatory framework. And in fact, Hester Peirce, who's been called Crypto Mom, who is not the chairperson of the SEC, but works for Gary Gensler, she announced at Consensus this year that she was doing a sandbox, if you will, which is like a testing environment for the US and the UK to talk about what they're doing with MiCA and how we might be able to come up with something like that. Because we really, the United States has really not done that. So it would include things like consumer protection, stablecoin regulation, licensing and supervision, and it's kind of a quagmire right now. So I'm hopeful that sandbox, that as the political landscape changes, perhaps we get more interest, and this may solve some of the issues that we've been facing in terms of the debt crisis. So.
Yeah, no, that's interesting. Well, Lynn, is there anything else that I missed asking you, or anything else you think that'd be worthwhile to our listeners on any of these kind of topics?
Well, one of the things I really want, I think, your listeners to understand is this is not going away. And it's really important to embrace what this technology means, because you will have a digital identity, completely digital identity, no more passport, right? And also, when you look at what your state or your country is going to own about you, I also want to know when a company like 23andMe makes, $380 million off of my spit, and I paid $100 to spit in a vial. That to me is an opportunity I think that's really what Web3 is about. Hey, maybe I participate in a study because my genealogy says that we live to be 150, or, we all die of cancer, or whatever that might be.
Yeah.
I should be able to, as opposed to the institution, the corporation making all this money, I should have been able to benefit. And I think artists and musicians, and even things like your DNA, it allows the opportunity now for everything to become an asset. Maybe you have a car, maybe I don't need a car. Maybe I like Airbnb. You Airbnb your car, right, to the neighborhood. All of those things, I think, become a little more possible in this environment, as we're seeing. So I think put your head in the sand and not try to understand it. I think it's really, really important to kind of start getting your arms around it. And it takes a long process. I've been in it since 2017. And I feel like I don't know that much. So it does require, I think, keep reinforcement. But I would say just get curious, right?
Absolutely. I know I took something away from just chatting with you today and from previous conversations as well. So thank you again for joining us today on Bank Talk. It's been great.
Oh, thank you very much for having me. Anybody feel free to reach out to me at lynnmarler@gmail.com or at lynn.marler@gbbccouncil.org.
Awesome. Well, Lynn, thank you so
you.
much again. And to all our
Thank you.
listeners, thanks for joining us. Keep on learning. Have a great day.
Thank you for listening to the Bank Talk podcast brought to you by Remedy Consulting. To reach out to Lynn, email her at lynnemarlor@gmail.com, or the GBB Council email is Lynn, LYNNE .Mailer, MARLOR @gbbcouncil.org. Thanks again, and we will see you in the next episode.